Hey traders, this is Ron at Market Tamer. Happy Sunday. Hope you guys are having a fantastic weekend. As always, everything in this presentation is for educational purposes only. All right, here's a chart, daily chart of the SPY, the S&P ETF. We finished up over 1% on Friday. If I zoom in a little closer, we can see that we opened up on the left side of that candle. We shot all the way up here, and then we closed back down here on the right, essentially unchanged from the 9:30 a.m. open. So yes, we were up 1%. Yes, we're well off the highs, but here's the thing. We are above the 50-day SMA in orange, which is the institutional moving average. We're also above the shorter term 20-day EMA moving average. Bulls have the edge here on the daily chart. Now, before the bulls get too excited, I have these lines drawn in. These are just trend lines to visually represent this trading range. So you can see all we're doing now is bouncing around. With earnings season here, maybe that could be the catalyst to either break out to new highs, or maybe we go back down and maybe test some of these lows from 285 down into that 282, 283 area. We take a look at the diamonds, the Dow ETF, similar situation. You can see with the resistance up there, the quote double top down here, support at 255. If I go ahead and zoom in, we gapped up, came off the highs again, but still above moving averages. Therefore, walking into this week, earnings week, the bulls have the edge. Take a look at the Qs, the NASDAQ, same story. Resistance up there, 195-ish, support down there, 182-ish. We're up here. Bulls on the daily chart have the edge. We just need to see if we're going to break out of this range. Now, on the Russell 2000, huge high wave doji, massive indecision here, which is represented by the huge price movement, 152 to 148, $4 move, still finished up over 1.8%, nearly $3. But in the grand scheme of things here on the Russell, again, back here were the highs, October, not this past year, a year ago, resistance at 160-ish, support at 145-ish, or pretty much smack dab in the middle. When you get those high wave doji bars, they're not necessarily sounding an alarm. It just shows you the bulls couldn't win, the bears couldn't win, and they end up finishing a little higher than where they opened, a little bit of the body there. Indecision is the end game. If I take a look at the VIX, VIX.X, look what it did, down 11%, back below 16, going down towards 15. The VIX is rolling over. Markets are pushing higher. They're working in tandem. There's no anomalies. There's no divergence here. So again, bulls have the edge. Now, with this being earnings week, there's a host of stocks. It starts off on Tuesday with the banks. JP Morgan, if I zoom out here, they're sitting up there near all-time highs. Actually, if I zoom out, go back out. If you go back to the beginning of 18, if you've held JP Morgan, it was around 120. It got as low as 95, then 100. There's been no money made since the beginning of 18, almost going on 2 years. So if this breaks out to new highs, that's going to be bullish for the market. Otherwise, if it rolls over, we just go to these previous swing lows. Big target on the downside right now, the nearest one will be 105 with that triple support. Citigroup is another one that's going to have earnings. Here's a trading range, high, low. We got to break out of that. Here's Goldman, another one on Tuesday. That's pretty easy to spot up there, 221-ish. Support down here, 195-ish. And then Wells Fargo has its own problems. It's sort of a unicorn in its own way, but you can see tier 2, you get up towards 52, resistance down here towards 44. We'll see what happens there. Then there's other stocks like United Airlines. They're going to report on Tuesday. They've been range bound since a year ago, September. There's been no real big push up or down with any sustained action. See if that breaks out. And here's UNH. Now here's one that's been off its highs. December a year ago was 280, was almost down to 210 here just early this month. I'll use UNH as an example. So with all these stocks having earnings reports, and there's a cornucopia of companies are going to announce as the week goes on, earnings can cause volatility. But what about protective puts? So I want to bring this stock in, UNH, and just give you a paper trading, virtual trading example. If we look at UNH with earnings, I typically like to grab that put a couple days or maybe even a week or so before earnings in case any pre-announcements leak. But also enough time after the report in case the stock goes into a downtrend. Now, stocks usually go down in escalators, up in elevators. So straight down, sort of a 45-degree angle up. It takes longer typically to go up than down. Therefore, usually 45 to 60 days, sometimes, 90 days is almost overkill for that earnings report. And I like to use monthly options. So if I was going to use 45 to 60 days, December would be the ticket here because November monthly only has 33 days. That's going to be too short. December or January, either one could work. If I use December, what I would typically do if we look, the stock's at 222, come in here maybe to strike 220 and purchase a put at the money. Now, with the market moving pretty big on Friday, some of these bid-ask spreads are a little wider. I would estimate, or what is that, around 60 cents. The mid would be about 30 cents. We could probably maybe take that down 20 cents and probably have a decent chance of getting filled. So maybe 15.15 up to 15.35 would be somewhat of a realistic price. The delta is about 0.58, and there's 800 open contracts. Typically, when going at the money, the deltas are going to be around 0.50, in this case, negative 0.50 for a put. And if I'm going to have, let's say, 100 shares, 500 shares, or 1,000 shares, I'd be looking at 1 put, 5 puts, 10 puts. That's not going to impact the open interest very much, which is good. If there was only 18 contracts open and I'm looking to buy a couple, when I try to get out of this option, they might put the bid-ask spread so far apart, it would be highway robbery. So having 800 contracts and I'd be less than a couple percent of the open interest, to me, is acceptable. So go ahead and, if you follow UNH or you want to see how puts gain and lose value, this would be a good example, I think, with the strike at 220. So that's all. Just go right at the money, typically 45, 60 days. Go ahead and practice that. Great time to learn about puts with earnings season here before the stocks report. Now, other stocks. Here is Apple. If I zoom out, new all-time highs on Apple. We talked about Apple holding up so well even when the market was starting to pull back, never even lost the 20-day. Now it's just launching itself higher. How about NVDA? Oh, and by the way, if I go back to Apple, remember I said in September, I just want to highlight this, beginning of September, which is right about here. Be careful, because as we get into September, that report comes out, right? In the first usually week or two of September. That marked the high, just like the seasonality said it would. What happened? It literally put a stop in the stock until the end of September. What happens at the end of September? The seasonality on Apple instantly turns positive. It's a 2 to 3 week window right from the report. Doesn't mean the stock's going to crash. And if you go back and listen to the videos, it's exactly what I said, only because that's what the data shows. It's amazing. Apple, if there's a top that's put in Apple, there's a lid on the container, you wait 2, 3 weeks, and then pop goes the weasel. And now Apple's off and running. And if you think about it, from when we hit October 1st, the stock was at 203, now it's at 236. Quick 30 points. And you could say, well, how could we be prepared or maybe even expect that? Using seasonality. This worked almost to perfection on Apple. All right, here is NVIDIA. Now, NVIDIA comes in because look at this little high here and this overhead resistance over here. This is called overhead supply. This area in April, when folks were maybe buying it because the stock was starting to break out, put a cap on the stock, and now that it's making attempts to get back up there, we're finishing off these highs. Once it can digest that overhead supply, and we start getting up to like 195 maybe, then we start going and targeting gap fills. So NVIDIA looks pretty strong here, technically. And then there is DECK, which is Decker's. This one had a nice move on Friday. What's interesting is once it clears this 155 area, the target would be that overhead supply starting around 172. That's a pretty big jump, well over 10% on DCK. So if you're wondering what does a trend change look like, look at this. Double bottom. Now you're gapping up. You clear that mark. There's now nothing to stop the stock from reaching this level. There's no more overhead supply. It's all sitting up here. So that's it, folks. Hope you found the video helpful. Bulls have the edge walking into this week. Let's see what earnings season holds. Have a great day and have a great week ahead. Bye-bye.